Hey, how you doing?
Hey, good. How are you?
Good, good, good. All well, all well. I see you've been pretty active, showing up and trading every day. That's good.
Yeah, I try to do as much as possible.
Cool, cool. Your voice is a little echoey in the microphone. Are you a little far from it, or can you do anything about that?
Uh, yeah, because the room itself is a bit echoey, but I'll put on my headset. That will be better.
Mm.
Is it better now?
Oh, that's a lot better. Thank you. And
No problem.
my ears don't hurt, so it's good. Cool. So tell me what's going on with your trading? How's it been?
Uh, so I think. Uh, it's better than before. I think I'm more calm when I'm trading. Uh, but next to that, in the first weeks after our first meeting, I was a bit struggling with the concept. But I noticed after a week or two, it began to sink in. So waiting for your levels and then watching price action, and because I actually saw, you probably know him, Umar Ashraf,
Yeah. Mhm.
YouTuber, uh, but it's exactly the same as he's doing.
Mhm.
He also chooses levels and then watches the price go to that level and reacting on the price action. Uh, so yeah, I saw some people on YouTube, suddenly everyone does this thing uh, that I see now. So I saw a few. Also, I remembered I had a mentoring session, just one, with Anya from Bear Bull Traders, but like 2 years ago or so. And then I started remembering that it's exactly the same thing that she explained. Uh, so it began to sink in after a week or two. Uh, so I think the first 2 weeks of my exercises weren't really that helpful. Um, but I think the last week or 2 weeks are, I'm getting there, I think. I'm still, during my trading, still sometimes a little bit FOMO-ish. Like yesterday, I had a bad FOMO day. Uh, and sometimes I just make mistakes, but I think is it practice? Is it just being comfortable in reacting quickly and reacting when it's needed? Because sometimes I still make mistakes. Like yesterday at the beginning of the market, I forgot to set my pre-market low. So I never would have taken that trade that I have taken if the pre-market low would have been set on the place where it needs to be, because I don't use DOS traders, so it doesn't happen automatically.
Mhm.
Uh, so yeah, I think that's the bit where I'm at now. Uh, so yeah.
Okay. Well, one thing is just using the software to the maximum potential, as in whatever indicators you want, let them be populated automatically. If you're using levels, moving averages, whatever it may be. So remove your workload, release it as much as you can, get it done for you. The less you have to do, the more energy you have left to actually focus on you, on the emotions, on risk management, on all these things. So that's really, really important. And yeah, FOMO is a one interesting thing. And the thing about it is, it doesn't make any sense to me, even though I've experienced it plenty, but it doesn't make any sense. Because the fact of the matter is, you are here dealing with the financial markets, and it is an absolute gold mine. Like, it's ridiculous. And just to give you the example, you've seen me trade. I only trade one thing, just the SPY, or just the S&P. And I don't look at anything else, and I still get multiple trades per day, multiple opportunities in a day. And if you're looking at just two or three tickers, that's already like 20 opportunities in the first half an hour. It really sets up on whatever your strategy is, whether you're looking at levels or, you know, reversals or whatever. So,
Yeah.
you know, it is an absolute gold mine, and all you got to do is relax, sip on some coffee, wait for it to get to your level. That's it. You do
Yeah,
that,
sometimes
it's amazing.
I struggle with that because you have to wait until it gets to your level. If it doesn't get to your level in the first hour and a half, let's say, because I can't trade any longer, then you don't have a trade. And that's always in the back of my mind, but I know what you're going to say. It will happen. It will happen. I know it's but it's still it's a difficult one. Yeah.
It is,
But
but
I
here,
understand what you're saying.
yeah, try this one. Let's say you sit there for an hour, your time's up, you didn't get a trade, you go away. When you come back the next day, what do you think's gonna happen? Is the market gonna be there or is it gonna be gone?
Yeah, indeed.
It's gonna be
It's
there.
still gonna be the same.
Yeah. So come back tomorrow and do it again. What's the big deal?
Yeah.
Right? So just think of it that way. The market's been here for I don't know how many years. The only time that I know that it shut down was in World War One during a couple of years. Since then, it's
Okay.
never shut
Hopefully that
down.
will not happen.
Yeah, and so you know, since then we've had many events in the world, and the market's still here. So
Yeah, indeed.
it'll always be here as far as I can see the foreseeable future. So what if you didn't get a trade today? Is that a big deal? Not really.
No.
Probably a good thing. You see?
Yeah, yeah.
So you gotta think bigger. You gotta put your mind in a bigger perspective, adopt a bigger perspective, zoom out,
Yeah.
you know, and then it becomes a lot more relaxing and fun.
Well, I think I've made some steps in the last week, especially. Even though I had yesterday was a bad FOMO day, but regardless of that one, I think I've made the most important steps this week, as I really was starting to really wait for my levels. I now pre-market. I changed some things. So pre-market, I actually mark the levels that I'm willing to look at, because I asked you, I think 2 days ago, or was it yesterday? I don't remember. That I asked you about the trade for Nvidia, and I sent you 2 screenshots, Nvidia and the SPY. And on Nvidia, there were a lot of levels, and the SPY was an open window until like 1.4 or so. And asked you if those levels are in the way, if that is a problem. But it wasn't really a problem. It depends on the risk reward and your strategy, you told me. But I decided, for me, I like to have room. I don't like to see some levels, even though they're $2 apart on Nvidia. It's not enough for me. I don't like it. I feel too anxious to take profit, or if then it holds at the level and I'm getting nervous, and no. So I need at least, like say on Nvidia, 5, 6, 7 points. So that is one thing. So what I do now in the pre-market, I actually mark the levels that for me are good enough to break and retest, and have a good enough window to the upside or the downside. So that is one thing I changed, to have a more clear, how would I say, a clearer plan of what I'm going to do that day. I know I only have to look at levels that are marked, and I don't need to look at anything else, just those levels. So that's one thing I changed. I also removed all of my indicators except VWAP, because I felt it was too, not because you told me that's the most important part, but because I really felt it was cluttering all my, it was blurring my vision. It was the chart wasn't clear anymore. So I removed everything except VWAP, because yeah, I like VWAP. Maybe he will, maybe it will also disappear in a month or so. I don't know. So yeah, I changed some things up, and I think I'm on, or I hope I'm on the right track. But yeah, the only thing that I think I'm still struggling with is indeed the FOMO part. So I should really work on that one. Because I think if I get that one right, and if I just sit and wait, I know what you want me to do. I know break, retest. I look for I like the hammers on a retest, which when you really see a hammer or reversed hammer, or so really clear price action. So I know what I'm looking for, but it's in the details, I would say.
Yeah, everything you're saying is making perfect sense. If you've got room to run on your chart, that's ideal. You don't have to think about risk to reward. You know it's massive. So no problem there. So it's easier just to look at charts with less lines on it. If there happen to be lines, don't trade it. Simple enough. Stuff on the way.
Yeah.
Simple. That's it. So yeah, FOMO is one thing I'll tell you. No matter how much experience you have, you're still a human being. You're still gonna get FOMO. That's the truth about it. So it's not a matter of eliminating FOMO. It's a matter of learning how to live with it. Like I get it every day. I mean, you might hear me in the chat room every day, like, oh, I'm getting FOMO right now. I say it every once in a while. And it's true. I see the thing go and I know I should get it. It's a perfect setup, but I don't for whatever reason. I'm doing something else, or there's no risk to reward on it, whatever, whatever reasons. So the key is on the rational level, understand that the market is always there and always gives you opportunities. So you shouldn't be chasing stuff. But at the more human level, you got to realize that it's going to come to you. FOMO will come to you. Fear will come to you. And you've got to make peace with it. You got to the best way to do it is to acknowledge it and don't fight it. Okay, like you're feeling FOMO right now. You're trying to remove the FOMO. No, but you're fighting yourself. You're getting tense now because you're trying to fight yourself. That's not helpful. That makes it worse, actually. So instead of fighting FOMO, just realize, okay, I've got FOMO right now. You can just say it out loud. Say it in the room. I say it on the mic all the time. Got FOMO right now. Okay, what do you do about it? Well, you acknowledge it. That's it. Don't give it more attention than that. And you'll find within a minute, it'll disappear by itself. It's your
just by acknowledging it.
Yeah, just acknowledge it. It's your enemy. You don't want to give energy to your enemy, right? Think of it that way. By fighting it or doing something about it, taking a trade because of it, you're giving it energy, and now it's going to get worse. It's going to get much worse for you. So simply acknowledge it and sit there quietly at your desk or have a chat with us in the chat room, whatever. Just don't do anything about it. That's the key. Like, don't do anything. I mean, don't even take a trade because it's there. Don't take a trade. So just acknowledge it to your own conscious mind. Okay, I've got FOMO right now. That's it. And there's no like, what's the answer? What's the solution? You don't need to go down that track. You don't need to. That's simple acknowledgement. Actually, you'll find most of the world's problems are solved. Most human being problems, internal problems. 90% of the problems are solved just by acknowledging the problem. You don't have to go seeking a solution. That's kind of how human nature works when you dig deeper in the subconscious mind and all that. So it's a good thing. Maybe if you want, one little trick I've done in the past is just keep a little piece of paper with you while you trade. Whenever you get FOMO, just write down, I've got FOMO. That's right. You don't have to even read it. When you're done trading, throw it in the garbage. Doesn't matter. It's basically just getting out of your system. You're not fighting it. You're just acknowledging it. Whether you speak it out or you write it down, either way it works. Writing it down can help sometimes. If that's better for you, try that.
Yeah, I'll start doing it.
And you'll realize within a minute, really, it happens fast. It goes away. And then you're back to clear-headed thinking. And then you're observing the market and you realize, oh, good, I didn't take that trade. It would have stopped me out. You realize that after. So
great. The other thing I'm a little bit struggling with is the risk versus reward. Because I see also in the community, I see people getting in like on a pullback and they get in at the bottom. And I think, how do you get in at the bottom? At that point, if you go for a long, at that point, the candle is still red. Even though, and still you get in. How to do that?
Yeah, that's a good one. That took me a while to figure out. Let's look at some charts and I'll show you that stuff. You got screenshots of trades you've had recently. We can look at those and pick these up.
Let me share my screen. I won't be looking directly at you because my webcam is there and my screen is right in front of me.
Oh, nice Porsche.
Yeah.
Like
it's my dream car, Porsche. For me, it's the only car that exists.
Nice. Yeah, they're beautiful.
Okay, let's take AMD. Maybe I scroll to the end because, as I said, the beginning was still a bit blurry for me. So I think my trades will be better as they progress.
Mhm.
So for example, here, so I got in. So these are just normally I saw, and that was also something that you stated, that if you mark yesterday high low, 2 days ago high low, the open and the close of yesterday, and pre-market high low, that most of the times that's all you need.
Mhm.
So I really noticed that also when I was doing my exercises. So these, most of the times, the levels that you see here are just those levels. So here I got in after a retest of this level because I saw a doji on low volume. So actually a pullback on low volume, break of high volume, retest of low volume. So I got in. This is a hotkey error, but okay. So I took partial because it was really struggling here. I thought so because this was giving me confidence, but then this wasn't that much. So because it made a new low, but it didn't go further. So I said, okay, let's take a 20% partial or so. And then I got in got out break even, and I got back in after I saw the doji. I got back in here, and here I struggle with how do you get in here again instead of here.
Mhm. All right, let's get through the beginning. I understand why you entered, but when you entered, firstly, where was your stop loss?
Above this one,
Okay, and where's your target?
here, this one.
Down there. Okay. So on the way at about 116, you tried to take some partials, is that right?
Yeah, because I saw really struggling every time it got to 116. It buyers stepped in, so I saw it really struggling, so that's why I took some partial there.
All right. And then that one was a stop out, right? Just at one
Yeah, so
is that right?
it's partial and then stop out.
Stop out. Okay, got it. All right. So that makes sense, as in you got good risk to reward when you entered, and then you took partials as it struggled. Cool. And then you even stopped out just about at break even. Now, look at that level when you entered just below, what is that, 116.79. What is that level? Where did that come from?
Pre-market low.
Okay, pre-market low. All right. And then the next level down is what, 114.70. Okay.
I
So,
don't know what it is. Probably
okay.
yesterday open or so.
Okay, so that's the level. That's where there's room on the chart, right?
Okay.
That's
Yeah.
where you want to trade. You want to target that move, that range, not this other stuff. You don't want to be getting in anywhere inside of the other stuff because there's no room between levels for a profit.
Yeah.
So
So I should have gotten in here or here or
yes,
here.
exactly. So what it actually did at that 116.79 level, it broke out. At the candle that you entered, actually, that was a breakout candle. It broke out.
Yeah.
And then for something like 10 minutes, it just kept retesting that level, confirming to you that level is now resistance. It used to be support in the pre-market, and now it's resistance. And as you see it continuing to confirm that it's resistance, that's when you enter the trade. Enter with a tight stop, and you run that thing down through 115, and then it keeps going. Even beyond that, you can keep a little on the table for that move too.
Yeah. Okay.
So you got to target your profit zones. Think of it that way. As you know, you like to have space on the charts, right? As you were mentioning. So target the space on the chart. So
Yeah.
where you're exiting is actually, or rather where you're taking those partials is actually nothing more than it's getting ready to go and really go for your profit zone, which you pre-identified. But then you executed completely something different, right?
Yeah,
So
indeed. Okay.
So really that entry, based on your style and your way of seeing things, that entry is premature. And actually where you exited is where you should have entered. And
Yeah.
really caught
Okay.
that serious move. That's a pretty serious move, man. A couple of dollars on AMD like that. That's a very
Yeah.
good catch. Lots of money in that one.
Okay. So these
So
are the trades that I'm lately sort of getting or semi getting. So I see there is improvement, because at the beginning of the exercises, I really wasn't able to do this. So I see some real improvements, but indeed, like you say, I still need to. For me, this is a FOMO entry, and those are the little details. It's not really that bad, but because I still have a plan. But yeah, I don't have to say to you,
Yeah, and you can see now here with FOMO, you can see how dangerous it is, because if you take a trade based on FOMO, then everything that happens in that trade afterwards, everything that happens in that price action afterwards, you will be making poor decisions.
Yeah.
Taking it off too early, holding it past your stop, I don't know, whatever. All this stuff will happen if you begin the trade from a bad mindset, let's say.
Yeah.
You'll end up executing the trade with a bad mindset. FOMO, revenge trade, whatever. So you really gotta not entertain FOMO. It's not about fighting it, it's about not entertaining it. You know that there's a ghost in the room. You don't fight the ghost. Just say, "Hi, hello, I know you're here." Well, that's it. It'll go away by itself.
Okay.
That's how it is. That's how you deal with the ghost. Not that I know. So, that's but I mean, yeah, you've got the idea. You've got space on the chart. You got to target your profit zones. And if it sets up, then take your trade. And FOMO, well, the market's here tomorrow. You can come back and trade. So there you go. Same thing. Let's see. What did you do on this one?
More of the same. So I have these levels here, and this one was my first one, 112, which is the high of yesterday, I think, or close of yesterday. It will be the high. So I waited for a break. The volume came in, not that high, but still higher than before. So I waited for a retest, which I saw here, and I entered. Was a little bit late, but yeah, I just clicked and it was later, so I got in. I saw here some struggling, so I took partials, and then here I took a lot more partials because I saw this is going nowhere. So I took more off, and then I exited like the last 30% or so at break even. Then I got this break again on elevated volume. I saw the retest, so I got in for this level. So I took partials here at my target, and I got out at break even. This one, the same, high volume breakout, waited for a retest, got in, and then I saw these dojis and these ones over here, so I got out at break even.
Okay. On that first one, what was your target?
113.
Okay, so that was your target.
Yeah.
So as soon as it touches your target, you should be taking off 80 or 90% right away.
Oh, wait. No, it was 115. I wanted to get to 115 indeed.
Okay. Why was 113 not your target?
I don't know, actually. Because maybe I thought, okay, $1 it's maybe not enough.
You're getting greedy.
Yeah. But what is enough on a let's say a ticker like AMD? What should you be happy with?
Should be happy with support and resistance,
Okay.
wherever that happens to be.
At minimum, an RVR of 2 or 3, I suppose.
RVR 5 is typical. If you're not getting 5, don't even take it. 3 is a bare minimum. You should rarely be taking 3 to 1. So on this entry, let's say, with a very tight stop right below the level, and it hits up to 113, you've got 5 to 1 or something like that.
Yeah.
Okay. So RVR is not a problem here. There's plenty of space for a profit. But you got to target these levels. Now, 113 is pretty serious resistance. You can see it in the pre-market. Right? It hits and it's resistance. You know that it's resistance. It's been resistance for the last 4 hours, whatever it is. So you can't actually plan. Yeah. And just look at the pre-market, the most recent action. It hits 113, the post-market also. 113. That's firm resistance. There are sellers sitting there, and you know that before the market opens.
Yeah.
So if you're taking
that's also something
yeah.
That's also something I changed recently, that I look at the last, mostly at the last 2-3 days
Yeah,
for levels on 30-minute charts then.
that's perfect. That works for day trading. You got to look at recent action, exactly where the buyers and sellers are sitting. So in this case, 113 is firm resistance. Buyers are, sellers are firmly selling at that level. So you target that level if you're going long. Simple enough. So you cannot just ignore it and think I want 115. That's not going to work. You got to pay attention to support resistance. You got to pay attention to where are the buyers, where are the sellers. And this recent action on the 30-minute chart tells you all that stuff very easily.
So actually, if you see from recent action that it is support or resistance, then you automatically think that it will be support or resistance again.
Yeah, exactly.
Okay.
It continues to do what it's doing until it doesn't do what it's doing. That's it.
Yeah. Okay.
So
Pretty
that
simple.
113 is resistance until the price action breaks out of 113 and then bounces off it doing the retest, confirming it was resistance. Now it's support. It's flipped.
And there you can probably add.
Yeah, you can add, you can start a new long, whatever, all that other stuff.
Okay.
So what is resistance will continue to be resistance until there's a breakout and a retest confirming that it's no longer resistance, it's support. Same thing the other way around when you're dealing with a support level. So
And
you gotta target that. Yeah,
and how do you do it? Because this is now in the first 5 minutes, which is normally I don't do it. I think it's one of the rare times that I took a trade in the first 5 minutes. But even though another later in the day, let's say, I don't see a real good example here, but let's take this one. So the price is going, it's going fairly quickly. But to calculate your risk based on, let's say, your level here, let's say you have 15 cents or 20 cents of risk, how do you do it so quickly or quickly enough? Because the price here moves very quickly. It goes through the previous bar very quickly. So how do you do it?
Well, there's a couple of things. You did it here, right? In the simulator, in the replay mode.
Yeah,
You
because
did it here
I
in the
took
replay mode because you're only watching one thing. When you're live, you're probably watching 3 or 4 or 5 tickers. So
Yeah, I
that's one
changed to
important
3.
thing. Your attention is focused. You're not diluted across different screens when you're doing this practice stuff. So now if you do that live, you're just watching one thing, you'll be better off in that sense. You'll get more intimate with the price action on that one ticker and you'll be able to do exactly what you're doing here. Right? So that's one piece of it. The other piece of it is you don't actually sit and look at the numbers and calculate, okay, it's 10 cents, and so risk to reward is $1, and you're just looking at, forget about counting the numbers. Just look at the chart. It should have massive room to run. Your risk should be this much, the reward should be this much. That's 10 to 1. It just looks like 10 to 1 on the chart. That's it. That's all you need. And if it looks like it's about 3 to 1, don't touch it. Just leave it.
Yeah.
The
But then to know how many shares you buy.
Yeah, so that's where you can use fixed risk hotkeys on DOS. That's one way. Other than that, you'll have to go with flexible risk. So you approximate, okay, at this thing's $110 stock. I usually take about 100 shares on this. Or something that's a $50 stock, I take about 200 shares on that one. Then your risk is flexible, as in it's a range, it's not precise. So that's another way to do it. That's how I do it, but I do it differently also. On top of that, I scale in and scale out, and I watch time decay on options. So it's a different kind of set of things I look at as well. But what's important for you now is to keep it simple and go with a fixed dollar risk per trade. So at least that stress of calculating is out of the picture. When you're trading live with DOS Trader, I'll give you the fixed risk hotkeys, where you basically within half a second, quite literally, you can tell DOS where you want your stop to be, and then hit the button to enter the position, and it'll calculate how many shares you need to take to give you that dollar risk, whatever you define in the script.
But the problem is I can't trade with DOS. Yeah, there's some law in Belgium that says you cannot trade on, or you can trade on shares or stock, but you have to pay a lot of taxes on them. So I don't actually trade stocks, I trade CFDs. I don't know if you ever heard about them.
I've heard of them. I don't know much about it. Okay.
Yeah.
Yeah.
But the problem is you can't trade CFDs with DOS. So I have a very specific broker that has CFDs available, but they don't have that hotkey kind of stuff,
Yeah.
which
Okay.
is unfortunate. So I need to have fixed amounts then.
Yeah. So I don't know how fast your platform is. The thing about DOS is it's very fast. It's accurate. You get the executions immediately. It's direct access. So if you have that limitation with the software you're using, with the platform you're using, then you can't trade really fast, like trade the open like this. So now there's ways around that. You just trade bigger time frames.
Yeah.
Trade a slower pace of the day. So wait for a 30-minute thing. So if you're watching this 30-minute chart right here on your chart, you can see that 15 minutes into the open, it's firmly rejecting from 113. And it sits there for like 10 minutes and keeps rejecting. So as you're watching that, you have about 10 minutes worth of opportunities to calculate how many shares you can short from there with a 20-cent risk, for example, whatever it may be.
Yeah.
And then you type in the order and make it simple. And you're trading a slower time of day, which is only 10 or 15 minutes after the open. Still,
Yeah.
that's not really a problem. There's a lot of days where I don't trade the first half an hour even, and I trade only later. That happens.
Okay.
So you can do that stuff without too
Yeah.
much fuss, you know?
I want to change later on to options because on options that law in Belgium doesn't apply. So
Then
in
you
the
can,
future, I want to go to options, but I think for now, maybe I should first get profitable in the normal stuff and then go to options.
yeah, for sure. Get familiar with price action first. I mean,
Yeah.
you're doing the right thing. You're practicing it right here in this replay mode, which is perfect.
Okay.
So you got the right thing going on. On the second trade, looks like you took it, broke down from that 112 line. You took the retest, and your target would have been down there at 111.13. Is that right?
Yeah.
Okay. Cool. Now that looks great. You got the entry as tight as possible with the stop loss. That looks like about 4-1, 3-1, something like that.
Yeah.
Enough room for a profit, and off you go. And so when
And
it
do you
hits your
set your
target, you get it off. Go ahead.
in this kind of trade, do you set your stop at the top of the candle or the top of the previous candle or just above your level? Or
On these, yeah, I like to put it at the level.
no?
And since in this case, your retest didn't exactly retest the level, right? It retest a little below.
Yeah,
So as
indeed.
soon as this candle really closes and you're firm, okay, now it's on its way, you can tighten your stop a little. You tighten
Yeah.
it so it's now just above your candle. It's almost break even already. So it's
Yeah.
only really about 30 seconds where it's a large stop and then very quickly it's a small stop. And you leave it there. That's one rule you have. You never make your stop wider. You can make it tighter, but never wider, never bigger.
Yeah.
Okay.
That's one of the good things I do.
Good.
I never widen my stop.
Yeah, smart. That'll save you a lot of trouble, I promise.
Yeah.
Work on that. Yeah, and
Yeah,
then
and
you
the third trade was actually the one I hoped that would work out because here you see no resistance, or actually the first level is 109. So that would have been nice, but yeah, no follow through.
Yeah, you have 109, but remember you have 110 on the way, which is a nice round
Yeah.
number. So you can
Yeah.
target that. And if you look on the chart, look at the 30-minute. 110 was the area of trouble just recently. Just a couple days ago. You can see
Oh
that.
yeah, indeed. Yeah.
So you can expect there'll be buyers sitting over there.
I should have marked 110 probably.
Yeah, you can. But for now, stick to what you've got. And then as the price starts to move and you're targeting numbers, you can just see what's between you and your target. And you can do this live while the market's open. And in this case, you'll be able to notice, oh, look, 110 is interesting.
Yeah.
So, okay, target that. You know, it
Yeah,
doesn't
I
take,
really try to look at now also when it approaches levels to really see what the candle is doing. If it's going up and down, if it's really rejecting multiple times from a certain level, I'd really try to look at those things too now.
yeah, that's absolutely critical. So here's the thing about it. It's a two-step process. First is identifying the level, which you're already doing, and knowing what that level is. Is it resistance? Is it support? In this case, like 113, you know it's resistance. Okay. and then let the candle get to your level and let the candle confirm what you were thinking. So if you're thinking 113 is resistance and the candle gets there and starts rejecting from there, well, it's confirming that it's resistance. Okay, now you have conviction to take a trade. So yeah, watch the candle, make sure it confirms what you have in mind before you take any risk. Basically, that's it.
Okay. How long before you set your stop to break even? Is there a certain rule?
First partial. At your first partial, stick the rest at break even. And that's more a psychological thing to manage your psychology. Because once you put money in your pocket, you don't want to lose any. Right?
Yeah.
So if it goes back to break even, okay, break even. You didn't lose anything. And you made some out of it. That's it.
So as long as you don't take a partial, you don't set at break even.
You can. Yeah, that's possible too. For example, on this one, on this second trade, you can see you entered, and as the candle starts moving away from your entry, you can bring it closer to be just above your entry candle, the stop loss.
Yeah.
And really, by the end of the candle after you entered, it's really gone a long way already, and it's already getting kind of close to your target. Before it gets to your target there, you can just stick it at break even, just in case something weird happens, it comes back. It's at break even. It's all, but you want to think of it as it's already left the area, your entry area. It's left and it's gone. Think of it that way. And so then you can stick it at break even.
Okay. Let's see. I want to see if I wrote down other questions. Yeah. Do you generally notice if your trades are better when you are trading outside of pre-market levels?
Not for me.
Okay.
I use levels a little differently these days. I use measured moves on ranges on the SPY and stuff. So it's a little different. But pre-market is important for day trading, put it simply. And it's not necessarily pre-market high and pre-market low, but it's really what is a significant level. A high could be, you know, where it just touches one time, but where does it always touch and constantly reject or support? That's a significant level. You know, there's buyers and sellers sitting there right before the market opens. So as the market opens, well, you have an indication of what it's going to do at that level.
Yeah.
That's why pre-market has a place in day trading.
Okay. And if you see on YouTube, even Andrew and actually everyone from Bear Bull Traders, they all how do you say it in English? Preach to the choir about stocks and play. They actually take the time, half an hour, 45 minutes to an hour before the market opens to really search for stocks and play and volume and this and that. Because they say, I also read the book of One Good Trade from Mike Bellafiore, and they all say that stocks and play are crucial to a winning day trading strategy. How come that this stuff works then on a fixed set of tickers? I wonder for the last weeks.
Well, yeah. If you're looking at those fixed set of tickers I gave you, well, they're in play. They've been in play for 5 years. I'm looking at stocks in play too, just on a bigger perspective.
Okay.
That's all. You know, that's all it is, really. It's perspective. So these guys are looking for stocks in play every day, catalysts and all that. You know, yeah, that works. But there's a slightly different element to trading that stuff. You're looking at big gaps, lots of volatility right at the open, all of that sort of stuff. And yeah, that makes sense. It's good stuff. But there's a simpler way to do it as well, at least for me. So I don't go chasing any of that stuff anymore. It's just it's difficult.
Yeah, I noticed it's mentally draining.
Yeah,
especially
there you go.
if you do it.
So I mean, there's no right and wrong. Don't mix that up. There's no right and there's no wrong in any of this stuff. Okay. What's important is that you figure out a way that works for you. That's the most critical thing. So
well,
you know, if chasing around stocks in play like GME gapping up on whatever that meme stuff is, if that makes sense to you, okay, take that. You know,
Yeah.
you can. Otherwise, if you don't want to go around doing that for an hour every day before the market opens, and all you want to do is just sit there and relax and wait for one of these top 7 tickers to come to your area, just do that. You don't have to do much else.
Yeah.
So if this is better for you, then do this. If that's better for you, then do that. I just tend to go more with simplicity than complexity. That's just my way.
Yeah, indeed. Yeah, I agree. Okay, I was going to ask something else regarding that, but I forgot. Okay, won't be that
All right.
important.
Cool. Well, the market's just about open now. It's a pre-market. If you want, we can get through some live stuff and take a look, see what's going on. That's actually
Okay.
always quite useful since we're doing the session at this time where we can do it. You interested in that?
Yep, great.
Okay. So what I'll do is I will share my screen. So if you could stop sharing, please.
Yes.
And I will start sharing mine. There we go. It's just past 8 o'clock. Let me know when you can see my screen here.
Yes.
All right, so all this stuff. We've got the SPY. Well, this is the futures on the SPY, which basically acts just the same. And what we're seeing is this is a top. It was also a top overnight. It's come back to this level, which was a level of interest, has been for the last couple of days. I'm thinking to take a short right now. Stop loss right there, above the line short there. That's a target. Plenty of risk to reward, right? Make sense?
Yep.
Yeah, look at that. So stop loss would be above these candles. You don't know exactly how far to put it above the level. Just use the most recent candle. So right there, entering here. So what is this? About a 3-point stop loss. And again, the target is so far off the screen, it doesn't even matter. So that's the way to think of risk to reward. You can actually do it right now. And see that on a 30-minute, it's just so big, it doesn't matter.
Yeah.
You
Okay.
can expect that at this level, 53.30, it'll struggle because that's what it's been doing. But the big target is there. So there's an opportunity right there already on the
And
charts.
why is 325 a level that you marked and 330 not? Because at 330 you also see a lot of struggle.
Yeah, I'll show that to you in a moment here. Let me just put on this trade first. There we go.
Because I also looked into your measured moves thing.
Yeah.
And it looks very interesting.
Yeah, these are
Because I
measured.
see, yeah, when I see, I mark my levels on, because there's a few disadvantages that on my platform that I use for my analysis, but it's a cheap platform. It's $50 a month instead of 150 for DAS. So I still don't make money trading. So when I start making money trading, then I'll switch to DAS again. But for the moment, it's sort of okay. But I use TradingView, which I have I did a sale once for $200 for a year or so. So I see on the 30-minute chart because I have the pre-market level there. And I
Okay.
mark them on my analysis platform that I use during the session. And I see it quite a lot if I start marking levels that it actually turns out to be measured moves, even on Tesla and Nvidia, etc.
Yeah. It's pretty amazing how these measured moves work, really. So yeah, I'll show this to you right here. Oh yeah, just to start with, yeah, I took the trade on here. This is a live trade right now, by the way. Stop loss is right above this entry candle. And
Okay.
the reward is down here. I'm looking at what's going to happen here. I might take some of it off if it struggles here. I expect it to. That should be about 2 to 1 on the way. And really the end target's more like 5 or 6 to 1. So I'm looking at basic levels, really. The high over here makes perfect sense. Nice and easy to identify. And even just now, overnight, that's what it was. So that's one level. And then I'm interested in the lows here, right? So I've got the high, I've got the low. And these lines in between really are nothing more than just cutting this area in half or in thirds at this point. Nothing more. Just measured move. So in another way, if you want, you can just look at this range. See this level here, right? And previously it was just in this level, this range here.
It's crazy how it lines up. Is it
Yeah, it's
some
just
algorithmic thing or?
just percentage, 0, 25, 50, 75, 100. I mean, I just, it's not even percentage, just, I don't know, maybe algorithms work that way, but measured moves are just the easiest way to find targets and entries too. Just calculate your moves. It's so
It's crazy.
simple. Yeah, I wonder why people don't use it more. So you can really trade off of this stuff. That's all I'm doing. That's all these lines are. Just looking at ranges and measuring them, making them, extrapolating them. That's all I've done. It's like this is an obvious area. You can see the low here, the top up here. You can just measure this area and expand it up and down. And right now, today looks like, for now, before the market opens, it just wants to play in this area, in this range. And it doesn't really matter if you get stopped out, because see how tiny the stop is. The risk is so tiny. It doesn't matter. You can enter 2 or 3 times and go. And if it goes the other way, well, enter there and go the other way. You can stop out 3 times before you get a good trade and you'll still be fine. Still make money. That's the power of risk to reward.
Yeah. Okay.
So that's the measured move idea right there. So there's that. So let's keep that aside, and I'll keep an eye on that trade on the other screen. And let's see what's going on. Is there anything specific you're interested in to look at today?
Not really. I did not look at the market today or anything trading related. I only trade at the moment Tesla, Nvidia, and AMD. I ditched Amazon because I noticed last time you said if you see in the second, third, and fourth minute, if you see the volume dying out, then you shouldn't. I was going to ask you, shouldn't you trade it all day anymore, or are there some signs that say okay, you can trade it again today?
The 80-20 principle would say get rid of it. And 80-20 is all
Okay.
about efficiency. You're gonna waste your time and energy watching and waiting in case maybe it cleans itself up.
Yeah, I
Really
figured.
gonna
So I
like,
deleted it from my screens because
yeah.
5 out of 6 or 6 out of 7 days, or let's say working days, 4 out of 5 days, it was just dying out volume. So I just got rid of it.
Yeah, it's not worth the trouble for you. It's just not. That's why. That's
Okay.
why, don't bother with it. Keep it simple. You don't need to go chasing stuff in the market.
Yeah.
So you're talking about levels. Looking at Tesla on these last recent days, you can see that these are pretty obvious levels. You have this one here, right? And you have this, a pretty serious top at just about a round number. And then another now nice round number, 185, top there. And right there. So you have 185, 180. And if you're really just going measured moves, you would put on 175. So let's just move the line down there.
I'll open my
175.
platform because I
Look at
think
that.
I have exactly the same ones.
Yeah, this is DOS, same platform.
Yeah.
So Tesla looks like it wants $5 moves, 185, 180, 175. Right now it's sitting in here in this 180 or 185 range.
Yeah.
So let's see. And if it breaks out of here, well, the obvious target is 190, another $5 up. So let's pick one of these lines, move it up there. That's it.
And do you still keep in mind, or do you still mark the yesterday high and low and 2 days ago and pre-market and whatever?
Well, I don't anymore. Now, when I was
Okay.
trading these equities on Tesla and all them, yeah, you can mark them. So you can do either way. I've gone more towards this now. I'm trading the SPY, and so there's a few different things I'm looking at. So I do this more than that. But they both work just fine. This takes a little bit more work, as in just finding these levels. That's all it is. When you're finding these levels, make sure you're looking at a chart that gives you really good pre-market and post-market information. You need that stuff.
Yeah.
Right? Because a lot of times people just ignore that, and well, you end up missing this whole thing, 175. It's huge. It's right there. It's very
Yeah,
important.
indeed. Yeah.
Yeah.
Okay. And
So, go ahead.
is it also a combination possible that you use and your very recent levels like yesterday and pre-market, etc., and also these ones, or is it better to choose one or the other?
You can do a combination. Just be careful with the combination. Again, you may end up with confusion.
Yeah.
That's something you want to be careful of. So you can do that, but be very careful. It's
And
usually
confusion
easier
in the
to go
sense
with.
of?
As in, you might end up with too many lines on your chart and you wonder why you can't take a trade. There's no risk to reward. And then it'll blow right through some of these levels and you'll wonder why you didn't take the trade. It'll psychologically mess you
Yeah.
up,
I
right?
have that problem a little bit now.
Yeah. So don't put too much stuff on your chart. See, there's no right and wrong way to trade. I mean, you can trade without any levels at all and just use Bollinger Bands and moving averages and all kinds of weird stuff. There's so much stuff out there, right?
So
But they'll
so I
contradict
need to
each other.
so I need to find a little bit what levels that I find important or that I want to use.
Yeah. See, you got to look at what comes easy to your eyes,
Yeah.
right?
Okay.
So if these automatically marked levels come easy to your eyes, okay, just use that. If this way of doing it comes easy to your eyes, do that. What comes easy to my eyes is this stuff right here, this measured move stuff. Nothing to it.
Yeah.
Just figure out the top and the bottom and draw the line and extrapolate. That's it. And then just wait for it to hit one of these lines and trade off of that. Very simple. See, for me, that's what's easy. So I do that. Then I have all my energy left to manage the position and manage my emotions while I'm trading, all that stuff. So that's the way you really want to be doing it. It's
Okay.
got to be easy on you. The strategy should be easy so you can actually focus on what's the bigger picture, risk management, risk versus reward, emotional management, all that stuff.
Yeah. Because
That's what-
2 days ago I missed a trade on Nvidia just because of the levels. There were so many levels on my chart that I said, okay, this is not a trade. And then someone in the chat room or in your chat room took a massive trade, and I was like, ah, damn.
Yeah. That happens. That happens. So you don't want to get it all mixed up. I can tell you I did that. I mixed it up for a long time. I had 5 moving averages and VWAP and these automatically marked levels, and I would draw levels pre-market. And then when the price action started, I would draw levels on the 1-minute chart also. There's nothing left on the chart to trade with. It just there's no space. How do you trade with that?
Okay, so I start eliminating some levels that are automatically drawn that I think, or that I think are less important, or
You know what? I think you should stick with those automatically drawn levels because they're automatic. You don't have to go hunting
okay.
for levels or measured moves or anything. It's the workload is low, very low, and it's reliable, as in these levels are reliable. So keep it very simple. If you want to start removing stuff, just remove pre-market high and low.
Yeah.
Just remove that. Stick to previous days
Okay.
levels and 2 days ago levels. That's it. And then let the price come to you. Once you do that, you're not going to need much else. For a long time, you can just trade on that. You won't be
Okay.
having too much trouble.
Great. So what do you think? Am I going in the right direction?
Oh yeah, definitely. Based on what you've been up to recently, from what I'm seeing, you're in the right direction. You've got a couple of things that are dragging you down, a little bit of FOMO, a little bit of confusion, but you know what to do. You've got the bigger picture in your mind.
Okay.
And I can see that you're very actively pursuing this. This is not something that you're looking for a magic pill because you're really active all the time. I'm seeing that
No.
here with you. So that's a good thing. So in that sense, also, you are in the right attitude. You're having the right attitude to find progress, to make progress.
Yeah, this is my future. I have to do this. It's yeah, there is no second option. My wife sometimes asks me, what is your plan B? I say there is no plan B. If you have a plan B, you never make it. So, so that's my standard answer. But this morning I was sitting on my bedside, and it was a difficult moment. I was thinking, oh, will it ever work? Will
Yeah.
I ever be a trader that is living off his trading? But yeah, I think
Yeah.
that's normal that you have those thoughts, I guess.
See, that's normal when you're an entrepreneur at any level. Okay. It's not a salary that you collect just for showing up. A lot of people get that. Yeah, this is not that. Will your business survive? Will you make it? And once you've made it and you got some market share, then can it actually grow to a certain level where you can rely on it and sustain it? And from the day you start your business, honestly, till the day you die, not the business, but the day you die, you're always asking that question. Because if you're not driving it, it's not gonna generate profit. Very simple.
Yeah.
This is just day trading where you get treated the same as starting up your own business. Same thing. So there's never a guarantee and a certainty. It never comes a day where you tell yourself, now I'm consistently profitable. Now I know what I'm doing. Now I can rely on this for the rest of my life. Here, I've made it. The moment you think that stuff, that's when it all falls apart. The mindset gets all screwy. It's always work. As in, you always got to stay sharp. You always got to stick to your process. You always got to assess yourself. Make sure you're fit to trade. If you're not fit, don't show up to trade. Come back next week. Whatever. All these things. It's always work in that sense. You got to always stay sharp. That's what I'm trying to say. So that's the attitude you got to have to make this stuff work. And it's not just day trading again. It's all businesses. Everyone. And I've been around a lot of entrepreneurs. I've been lucky to have been around them. And this is how it is. So really,
I agree.
And another thing is the self-talk that you've got going on, like, will I make it? I will make it. There's no other option. Like, these are all, you're talking kind of in the future tense. You got to forget about the future and the past. Your self-talk should be in the present. That's how you talk to your subconscious mind. The thing about the subconscious mind is it doesn't know the difference in present, past, and future. To the subconscious mind, everything is the present. Even lies are truths to the subconscious mind, as in it doesn't differentiate between what's the truth and what isn't, and what is present, what is past, it doesn't. So really, the trick is talk in the present.
It feels so strange.
It is.
I was saying indeed, because last time you also mentioned it, and I still do not do it enough, but I'm telling myself that I'm a profitable trader, but I really am not. So it's really difficult. It's
difficult because you feel like an imposter.
Yeah.
Right?
Yeah.
Well, the fact that the subconscious mind works this way and that you're aware that it works this way is a good thing, because you can take advantage of it. Take advantage of these weird things.
Yeah.
Train your subconscious mind that this is the fact. I do make a living out of trading and it doesn't stress me out. It's comfortable. It's a good job. I work with good people and enjoy it, and I make money plenty all the time. I make losses too along the way, but I make more than I lose. And all of this is in the present. I am doing, I am making, I am whatever. Talk to yourself that way. You do that with enough repetition, your subconscious believes that that's actually what you are.
Yeah.
And it'll actually direct your behavior in that way. And you'll realize, oh, I'm making money. Suddenly, a quarter later, 3 months later, like, oh, well, I've had 3 good months. You didn't even know it, because you're just busy focused on the process. You look at the P&L after 3 months, like, oh, cool. That's how that works.
When is the time that you say, or that you can save on, okay, I'm ready to go, because now everything is paper, that you are ready to go live trading, that you can say, okay, now you have an actual chance at being a profitable trader during live trading? When does that moment come? Because now sometimes I feel like, okay, I'm doing all these exercises and I'm doing a lot of paper trading, not since I started with you, but even the months before. And sometimes it feels like, okay, I said to my wife this week, but I don't know how you say it in English, but if you are in the sea or in a swimming pool and you're like kicking your legs just to stay afloat, not to move, but just to stay afloat, well, I have that feeling now, that I'm just kicking there in the middle of the pool or in the middle of the ocean, and I'm just kicking, and yeah, I'm staying where I am. I'm not drowning, but that's it. And I feel like, okay, when will this become a profitable thing, and when will this become something that I really can enjoy, can do?
Well, staying afloat is 90% of the battle. You got to get good at that. You got to get good at that. Okay, otherwise you drown. No, simple enough. Just staying afloat. I mean, once you get comfortable that is the majority of the activity you got to do, then you realize, okay, now you're comfortable with that activity, which is just staying afloat. And then the profits will come. Because the other way to say it is, make sure you're at the table when your time to get lucky comes. So you don't want to blow up your account and never be in the business, and because you've lost all your money, and then the opportunities come. That would
Yeah.
hurt. That happens to a lot of people. You don't want to do that. So, as in lose money, yeah, you got to. That's part of this business, but not so much that you're not that you're kicked out of the business. That's important. As far as going live and all that is concerned, the moment you start getting over your FOMO, you should go live. And if you decide today, I don't have FOMO anymore. I'm trading with a clear head. Okay, the market opens in 1 hour. Start trading live.
Okay.
It's honestly, it's a decision you make. Like, I do not succumb to FOMO. I just trade my process. That's it. It's a decision you make, and you got to trust yourself. So you have to earn your own trust to do what you say you're going to do. And the way to do that is actually conduct yourself like that in your daily life outside trading. So you say you're going to do something, make sure when the time comes, you do it. And if you conduct yourself like that all the time, you've earned your own trust at the subconscious level. And then that'll spill over into trading when you tell yourself, okay, I will trade off of my levels with really good risk to reward. Then when the time comes that the price action comes to that level and you have really good risk to reward, then you take that trade. And you trust yourself to do that. And you trust yourself to stop out when you need to stop out. Trust yourself to hold it to the target when you hold to your target. And that's that. But you see, that's the thing. You've got to trust yourself. That is, firstly, that's a decision you make. And secondly, you got to conduct yourself like that outside of trading, as in you're building a habit here. You tell yourself you're going to go to the gym tomorrow at sunrise. And if you don't go, well, you're not going to be good at trading. It's not about the gym. It's about trusting yourself and doing what you said you would do.
Yeah.
That's how that works.
But sometimes I still feel that I have not enough confidence in the levels that I set out. Because sometimes I get in a trade and then I start doubting it because what if the level isn't that strong, or I marked it wrongly or whatever. So I still need to. Sorry,
take a look. Take a look at the screen over here. These aren't levels. This is just measured moves. These aren't even levels. This is complete crap. Of course it's wrong. I'm the only person in the world doing this. I marked this on my own chart right here. I could move it as well. Okay, now maybe this is correct. Okay. One day I might have a mood to mark it like this, another day I might mark it like that. I don't know. There's no right or wrong. But all you got to do is make sure you control your risk to reward off of these levels that you decide to trade. And it doesn't matter if it's right or wrong. What matters is you decide to trade them. Okay, fine. Trade off of them with very high risk to reward and you'll make money. There is no right and wrong. It's not like it breaks the high of the day and therefore now it's the right trade to take. No, man. There's a million different ways to do it. And all these different ways to do it has been created also by other people, just like you and me. No different.
But you really have to make sure that when you lose, you just lose 1 hour, I suppose, or less than 1 hour.
Exactly. Risk management, I'll tell you what, put it this way. That 80-20 principle that I always like to talk about, you're familiar with it, right?
Yep.
Yeah, okay. So break that one down a bit and go to 1%. Instead of that 20% effort, do 1% effort. Let's go that way. 1%. What is that? Basically, that one thing you got to do. Risk management. And that'll give you 60% of your rewards. Really. If you manage your risk really firmly, as in you stop out when you're supposed to stop out, you lose only 1 hour on every time you stop out, you will get 60% of the potential rewards you can get out of the market, which is massive already.
Yeah.
Just do the math. You break down 80-20, it becomes 60-1. It's amazing. Something like that. And so with one thing, you get massive results. And the way to say that is just become a really good risk manager and the profits take care of themselves. That's something that I learned from Andrew. Just really good risk manager. Now that's 1% effort. Let's go with 2%. So what's that one more thing you got to do? Reward. Control your rewards. And here's a fun one. That's 2%. Remember, it was 80-20. We brought it down to 60-1. Now with this 2%, you actually get 90% of the results. 90. That's better than 80-20. Isn't it? Funny how it works. So you control risk, you control reward, you get 90% of the results. You do more work than that, go complicated strategies, you get less results. You get only 80% results. 90 is
Okay.
better than 80, right? It's funny how it works.
Yeah, it's crazy.
And the whole world is going crazy in a rat race, running around trying to figure this out. It's a joke. It's really, you don't need to work that hard. I don't recommend working hard, really.
Because that's something that still boggles me, or that I still am surprised about every time I notice it, is that experienced traders, especially you have like this, how do you say it? It shines off of you. Also, Andrew also has it. You are also calm. Holy
Well,
shit, the first time after our first meeting, I told my wife, he's so fucking calm. Also in the chat room, and when you see Andrew trading, yeah, those people are always so calm, and yeah.
I
Crazy.
think that comes from acceptance. You got to accept that you're in business here, and in business, you don't make money every day. Ask any restaurant owner; they only make money on weekends. That too, at the dinner rush. You
Yeah.
lose money on most days. So once you accept that reality, then it's easier to understand that. Okay, take your losses and turn it off. And once you've made enough losses and blown up enough money, then you blow up another day. It's okay. Yeah, you know what this feels like. All right, just come back tomorrow. It's that kind of thing. You stay in business. That's the whole point of it. You got to stay in business. If you don't stay in business,
Okay.
well, that doesn't work.
Yeah.
So,
Okay.
I think that comes with a bit of experience, but more than that, just accepting that it's not clean cut and straightforward. It's not a salary, and it's really on you. Especially this is not a business where you rely on employees or anything like that, or you're trying to fight with competition for market share. This is one business where you don't have any competition, no external competition. It's all inside. It's all your inner demon that you got to fight all the time. And I like it. I like that book. The Art of War. There we go. Art of War. Talks about
Yeah, you
knowing your
posted
enemy.
it in the.
Talks all about knowing your enemy. You got to know your enemy and know yourself, and you'll win it. You'll win the war. You lose some battles, but you win the war.
Okay.
So you got to know yourself and know your enemy. Know how you're going to function at the instinctual level. And then you just kind of start accepting all these things that you got to realize are not in your control. It's not in your control whether you get the perfect setup or not. And even after it gives you the perfect setup, it's not in your control whether it works out. And even if you get the perfect setup with perfect risk to reward, still, you take the trade and still it may not work out. Because the market doesn't care that that's your setup or that's your target or that's your entry. The market doesn't care. You got to accept these things, that 99% of things are not in your control.
Yeah.
So why are you fussed about that? You're wasting your energy on that stuff? Don't. Spend your energy on what you can control, which is risk versus reward. The most important thing. And it's the most important because you can control that.
Okay.
Yep.
And then if you more technically then, because that was also a question that was, I think that was the one that I was going to ask, but I forgot before, is when you enter your trade, so you wait for the price to go to your levels, then you see price action, and is there some specific things that you want to see, or is it just basically price action, not that you really need to see a hammer, for example, or something very specific? Because that was also one of the questions that I asked you via Discord. And to what degree do you really need fixed rules?
You need fixed rules when you're starting, when you really haven't got a good grip on price action yet. Stick to fixed rules and keep watching price action, because that's how you learn it, by watching it, by being exposed to it nonstop every day. And then you get to a point where you're not even looking for fixed rules anymore. You're not looking for these patterns. You're just looking for where are the buyers and where are the sellers and who's more powerful right now. That's basically reading the tape, but you can see that on the candles as well. I'm looking for that stuff these days. I don't really care too much about patterns anymore. I'm looking at buyers and sellers, that too only at my specific areas of interest. And I'm trying to identify who's more powerful right now, who's gaining momentum, who's losing momentum, all that stuff.
And then that's actually the jumping of the price that you see at certain levels, or and your tape, because yeah, I don't have a tape now.
Yeah.
Okay.
You're watching that as it's rejecting or supporting a level, and the volume. And that's on the tape. When the volume comes in, is it buyers? Is it sellers? Market sellers, market buyers, limit orders, or market orders? Who's more aggressive? Who's winning the fight? You can see on the level 2, you see all the limit orders. On the tape, you see all the market orders hitting the limit orders. And it's like watching a football match, offense and defense, going back and forth.
Okay.
Now, that comes with a lot of screen time by watching it for a long time, showing up every day, being in the room, talking about it, asking questions about it, live. Live is really important. I spent about 5 years in the BBT chat room, doing this almost every day. I was in the chat room. So that's how I figured it out so far, up to this point. There's still so much more that I know I want to learn. I already have it on my list.
But so you actually do really recommend then to get DOS Trader again, even though it's more expensive, but just because you have a tape?
Oh, there's a lot more than tape. There's the tape, there's the level 2, but hey, if you can't trade off it, then for you it may not be useful. For you, perhaps Bookmap is more useful.
I have Bookmap now.
Okay.
Because I like the more visual thing.
Yeah.
Level 2, I hate the scrolling and the level 2, and then looking for. So I prefer to have the visual heat map in front of me.
So
but
for
I
you,
don't really do a lot with it yet.
So you should, because Bookmap is a really good visual of the level 2 and the tape in combination, all done with bubbles and colors and all the heat map stuff.
Can I just 1 minute, because my gardener is here and he has a
Sure.
question.
No
Sorry.
No problem. Take your time. It's all good.
Okay, I'm back. Sorry.
No problem. All good with the gardener?
Yeah, they are actually installing our garden. It looks a mess right now, but they are, yeah, it's gonna be looking different in a month.
All right. All good. Cool. Well, while you were gone, I flipped my position on that futures trade. Here, I'll show it to you. Right there. So I was in a short. I stopped out, and immediately I went long. Stop loss is down here. The target is just way off the screen.
Ah, okay.
Basically, I'm using the level, and you can see it made a double bottom, it bounced, and here it made a triple bottom, it bounced. Overall, on a 5-minute, this would probably be a big double bottom. There you go. You can see that double bottom right there.
Yeah.
So I'm looking at this whole setup. It looks kind of bullish. So ideally,
And do you
get
look
some
at
range.
and do you look at volume then?
Yeah, I've been looking at the volume. It's a little sporadic. It's a little difficult to read at the moment, but it's okay. You can see that the green volume, the white volume is kind of pushing up at the moment. It's not so convincing, but it is pre-market, so it is difficult trading. So you got to give really wide stops and make sure you know their spreads. Well, trading futures are no real spreads, but wide stops. So the stop is really down here, 53.36. It's basically a 2-point stop. And looking for a move all the way up to here. So, you can see the risk to reward. That's why I don't mind taking these trades. I don't mind stopping out a few times. Because when it works, it's great. It probably have to take profits halfway because that's where it struggles. About there, perhaps. Let's see. If it struggles again, I might take some off and go.
Okay.
So there you go.
What were we saying before? And Can't remember what saying before the gardener.
Oh, you were saying, oh crap, man, I had it in my mind as well, and I just lost it.
uh, well, another question I have was also, just because you now say I don't mind stopping out a few times because your reward is very good, but how do you limit your losing days then? Because if you stop out 3-4 times and that one trade doesn't come, then you have a 4-hour loser that day.
You can't think of it in a daily perspective.
Okay.
You're trying to make a living out of this, right?
Yeah.
One day isn't going to make or break you, and it shouldn't. The better perspectives are bigger perspectives. The bigger you can go, the better. I think what's really big and really practical is quarterly.
Yeah.
Well,
Okay.
did you make money at the end of the quarter? And typically, if you control risk and reward, yeah, you made money. You could have a whole month straight of losing days every single day. And still you'll make money. You can still be very profitable and rely on the income.
Yeah.
End of the quarter is when it makes more sense. When you're starting out, you probably want to look monthly because it's hard to even look in monthly, but that's a challenge. But once you get more consistency going, a little more experience, you can expand that out into quarters and 6 months periods and all that.
Okay.
And that helps. That bigger perspective really helps.
Yeah.
Same thing as looking at stock charts. Look at a 30-minute instead of just a 1 minute, for example.
Yeah. Okay. I think I remember what we were talking about. Wasn't it Bookmap?
Yes, Bookmap. Yeah, that's right. So
Because I don't really use it now. It's okay, it's open and I'm paying for it, but yeah, I don't really know what to do with it now.
I know what to do with it. Okay. When you get live in the trading room today, share your screen, share your Bookmap, and we'll go through it.
Okay.
We'll look at it
Okay.
live and see what we can find. And
Yep.
it's very, very useful, very powerful. I'll see if Nathan's going to come in today as well. He uses Bookmap a lot, and he can talk to you about it as well.
Yeah,
was
he's
with us.
a strong trader, eh?
Yeah, he's really solid. He knows what he's doing, and he relies on Bookmap all the time. That's his main thing.
Okay.
So really powerful stuff. And for you, I think it'll make sense.
Okay.
So
Yeah, I'm looking forward to it because it really looks really interesting. But yeah, I just can't figure out what to do with it.
it's all right. You got this. You're in the right place. You're in the
Okay.
right company. There's a lot of people around you who know what to do. So
Okay.
I don't know if you can execute trades using Bookmap, link it to your broker. I don't know how that works, but at least reading the information, that's what it's good for. So
Yeah.
you can really get that
Okay.
going.
Yeah, I'll share my screen in the
Mhm.
oh wait. Oh yeah, I'll do it. Yeah, no problem. Because yeah, it isn't running on my trading computer because it's not fast enough, my computer, so I am running it on my laptop from work, but I will call in with my work laptop.
Okay, yeah, perfect. Just share it that way. And yeah, we'll get into it. There's a lot of people interested in it. So you'll get lots of insight anyway, not just from me, but a lot of people will share
Okay.
their opinions.
Great.
Basically, to give you a bit of a head start, what you want to look for is you want to find liquidity on the order book. That's what the heat map is, the different levels. And then you want to watch how the market orders are interacting with that liquidity. Are there more
Okay.
market orders than those limit orders? In which case they're powering through the levels, eating up liquidity. If there aren't, then that liquidity level turns into a reversal area, either a support or resistance. So there's those sorts of things that you can pick up with Bookmap.
Okay.
And those bubbles as they form, that's basically reading the tape. We can pick up
Okay.
all that stuff.
Okay, nice. I'm looking forward to it.
Yeah. We'll do a good session on that today. No big deal. We'll
Okay, thank you.
And we'll get moving. It's all
Thank
good.
you.
Yeah.
Do you have any things, maybe next steps for me or what I should focus on? So I guess the FOMO.
Yeah, just there's a couple of things. Make sure you don't deal with FOMO. As in, don't make a deal with the devil, right?
Okay.
Just acknowledge the ghost in the room and don't interact with him.
Yeah.
He might be
Okay.
talking to you all the time, but don't interact. Just let them be. He'll walk away. Ignore someone enough times, they won't bother you anymore. They'll just go away, right? Treat it that way. It's the same thing.
Okay.
You really got to focus on that. I think for you, that's going to be a big breakthrough.
Yeah.
Once you do that, you'll be all right. And then just focus on the trading side. Keep it really simple. Let your workload be minimal. So the levels
Yeah.
are auto drawn, and you can only trade when there's massive space for a profit. That's it. Just wait for that stuff. It's okay if you stop out a few times because the reward is on your side. And try and think big on everything as much as you can. The bigger you think, the better. Bigger
Yeah.
time frames, bigger looking at the P&L on a quarterly basis, these sorts of things. It's more mindset at this point.
Yeah.
Earning your own trust as well, the way you conduct yourself outside trading.
Okay.
Those are the things you got to be consistent with regularly. And there's no one day that it clicks, oh, it's working. It's just gradually you just evolve into a different kind of person. You won't even notice it. And that's when it's right. That's the best way to do it. And you're in the right place. You have the right support system for all this work.
Yeah. And is it okay to set goals at a certain point in the future? I'll give a very specific example. My wife is pregnant and she's due September. And I have in my mind that I want to be a trader. I know I'm talking in the future, but I want to be profitable by September because it will be like 3.5 years by then, and I feel I'm on the good track together with you. Is it okay to set that kind of? Is it realistic even to set those kind of
Well, firstly,
goals?
congratulations on the baby on the way. That's amazing. Great news. First
Thank you.
kid.
Yeah, first. Yeah, it's a
Wow,
girl.
fantastic. You're gonna love it.
Yeah, I'm looking forward to it.
Fantastic. I got two myself, so yeah, it's a great time. Good for you. Good for your family.
Thank you.
Um, I'll give you a little story about goal setting. September 2019, I read Andrew's book for the first time. I immediately got into BBT and started trading simulator and did all that. 3 months after that, I went live. I figured I know what I'm doing. 3 months.
Okay.
My goal was to go live in 1 month. In 1 month, I realized
Ambitious.
I was still not sure. I was not sure. I was losing money in the sim here and there. I didn't really know what I was doing. But I figured, okay, I gave myself 2 extra months, man. I tripled my learning curve time. I should know what I'm doing now. First 2 days, I made money. Third day, I blew up the account. Quick live. Okay.
Okay.
And then after that, in the next 3 years or 4 years, 3 years beyond that, 3.5, I blew up multiple six figures for 3 or 4 accounts. It just kept blowing them up. All right. So if you're asking me about is it realistic to set goals on a time frame, I'll say no. Because in my experience, it's no. I went live in a couple of months. In the time frame, it becomes irrelevant.
Yeah.
What is relevant is that you're conducting yourself the right way with consistency. If you are conducting your processes consistently, the results will be consistent. If you are an emotionally stable person, your P&L will be stable. There's all that stuff. That is more important. That's more relevant. And if you focus on that, you can go live next week. You don't have to wait 3 more years.
Yeah.
So all that time
So
is irrelevant in my opinion.
okay. So, but it is realistic, not really that specific time, but it is realistic if you say, okay, you do what you have to do, you follow the process, then you will become profitable. No question, no doubt about that.
No doubt about that. And hey, I'll give you the simplest way to think about it. As we always talk about risk to reward, even on a strategy that has no meaning, toss a coin.
Yeah.
We'll still make money.
Yeah.
We'll still make money. So just focus on the right things.
Okay.
Forget about the time frame. Everybody gets messed up on time. Time
Yeah,
is
indeed.
a dimension that nobody gets it. Nobody understands time. It's a dimension that's beyond most human beings. So don't bother. Don't go crazy about it. I'd suggest just focus on the important stuff. Earn your own trust. Stick to your process. Control risk versus reward, and realize nothing else is in your control.
Yeah.
And you embody and embrace all that stuff, you'll be fine. You'll be more consistent before you know it.
Okay. Great. Thank you.
Yeah. Cool. Good stuff. Good stuff. So yeah, I'll be joining the chat room in probably about 15 or 20 minutes.
Yep.
So yeah, come on in and we'll get started today.
How do we do for next sessions, or do I shoot you a message in a few weeks, or how do you go about it? Or do you say, okay, it's not even necessary to do next month, or what do you think?
Just for now, just stay active in the chat room, in the
Yeah.
Discord, in the server, and show up.
Okay.
Message me whenever you've got a question. I'm also there watching what you're doing, watching everyone's screenshots and stuff. So I'm keeping an eye as well. For now, let's
Okay.
just do this because you
Yeah.
know what to do. Now it's a matter of grinding it out, just doing the right things. So
Okay.
for now, that's all it is. Don't think too far ahead on that. As needed, we can discuss things again. No big deal.
Okay. I'm going on holiday starting the end of next week, so on Thursday. So I won't be in the chat room for a week and a half, more or
Good.
less.
Good. Take a break. It's good. It's healthy.
Yeah, I think so. I need it. It's been a while, and mentally it's been draining, so it will be nice to reset some.
Gotta reset. Life's about to change for you. Baby's almost here.
Yeah,
Life's
indeed.
gonna change completely. So take
Yeah.
a break now.
Now that I still can.
Yeah, absolutely. Take it now.
Okay.
So
Thank you very much for all your help, for all your support, and the tips that you give, and yeah, your experience, and we'll get there.
yeah, you got this. You got this. It's a pleasure. And yeah, I'll keep in touch for sure.
Yeah,
All
will do.
right.
Thank
Cool.
you. See you in half an hour.
See you then. Bye-bye.
Bye-bye.